Good morning, everyone. Today is Monday, June the 24th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we continue to walk up this chain of motion. I'm going to move this range up here. Remember this was our FOMC range that we are looking at, and this is the highest candle volume range. So we're looking at two different measurements, and what we are seeing is that they are tracking each other fairly well. So what's the storyboard? Well, look at where momentum is. So momentum was up here near this high down, measuring the MACD at about 48. It's now at 67, 69 or so. So what does that tell you? Overbought formations can continue. What is the current formation telling us? By the dips, we have anchored VWAPs from highs and lowest lows well below the formation. We're getting fairly extended. So in a fairly extended space, that's bullish. We have dips that could be deeper that buy and then continue upward, or dips that sort of fall into a range of motion. And so my thought is that we fall into a range of motion. Friday's formations were a little bit sticky because it was a quarterly expiration event, and the motions were very sideways. We could see more of it today. So that's what I want you to look at. What does the bottom line say? By the dips. Where are the ideal dips? Somewhere between 54.94 and 55.09. And I need to write that down on my list here so that I am tracking with everyone here. What we're going to start doing as my schedule gets a little bit more squared away, we've just got to figure out where this youngest one is going to end up playing European ball, or, he might actually be going to Japan, so that would be kind of strange in terms of times. So 54.96 all the way to 55.09. Those are the edges that I like. Next on the list, above it, 55.50 is a number that seems reasonable, but 5,600 is where the call has been sold in the JP Morgan spread. All right, let's go to the NQ. I hope you guys like these colors. I just felt like a change. Feeling kind of bored, so I really, not bored at all, really. I just wanted something that felt more appealing. I don't know. Whatever. Clone this channel. We're going to move the channel up. We're going to see we breached it. Let's move it over here. We can see we breached it, but collapsed into it. So the breakaway formation is going to be up above 20,085 maybe in the NQ. And the pullback is 19,000. Looks like if we keep the higher highs, we should not break 19,820. That is my thought. Now, let's go for the highest volume candlestick, cloning the rectangle from way down there. And we're going to see, ooh, look at that. Breaking away. 1, 2, 3. Right up at the top of that range. One more edge to the bounce. And so pullbacks should be buy zones, folks. They really should be. Yes. I'm going to delete this one because I don't want to get it too messy. And I am going to move this all the way down here. Okay? So pullbacks are buy zones, bullish formations, very big volume candlestick pressure event, and also a pretty wide expansion range. So this is going to be a very big number, this 20,086 level. Breaking over it, it's going to force traders higher, and that could see 20,300. All right, so that's what we're looking at in the NQ. Let's take a look at the YM. YM really breaking. Look at how noisy this was, right? Remember, the storyboard is always the same. Look underneath When you're looking for price action, look underneath to see what kind of pressure is building, because buying pressure comes from underneath. It's where the buyers sit for value and go, yep, I'm going to take it. The sellers sit up here to go, oh my gosh, I got to get out of here, or they're buying to cover. And if you're buying to cover, you're actually getting out of the market, and that's a whole other storyboard. Okay, so let's clone this channel up to the top of this range. We can see the 39,730 looks like round and about the highs that we need to watch. If we break out of that zone, we're going to have a brand new formation that literally takes us back into 40,168. All right, or 40,213, which is the high of the recent past, but not the all-time high for this contract. Certainly, that's up at 40,335. Okay, so that's what we're looking at for the YM. Pullbacks or buy zones. Where's the ideal pullback? Well, we have a gap here, so that's troubling. If we can hold 39,450, 460, then things look okay. Otherwise, we will fill the gap. And filling the gap means that we come down all the way to, looks like 39,178. All right? If it comes all the way down there today, I think it looks like a really nice buy zone. I'm not sure it will. I think we'll stagnate and drift. A lot of compression here, so I would not be surprised if we retest the breakout area, but this very high volume candle closing the month tells me that this zone right near the close of Friday is going to be a particularly interesting one, and that Friday close is 39,586. All right, let's take a look at oil. Oil is starting to feel a little bit bullish, but I got to tell you, tinfoil hat tells me that we're very likely to sit in this range for just a little bit longer. Look at this. It's building an inverted head and shoulders pattern. If we get down to 77.68 again, it is going to be very likely a gorgeous buy zone. Between 77.68 and 76.60, 76.50, I'm going to be loving it. I mean, it's going to be very good for upside pressure. Right now, highest volume candlestick formation sitting right there a couple of days ago. And then we have this one. Interesting that these high volume candlesticks have a very compact zone. I got to think about what that means. Higher highs above 81.55 takes us into 82.70 and then 83.70. Lower highs takes us from 81.55 to 80.20, and then a potential breakdown into 79, and then 78, and then 77, and then 76. I expect that to happen very much so. Notice, what are we doing? Testing higher but not holding higher. Testing lower but not holding lower. This is getting ready to move. So below 80.20 or above 81.55, very likely to see continuation of price action. Whoopsie. Lastly, what's gold doing? Well, I got to tell you, gold is doing the inverse of, I don't know, it's doing the inverse. This is a bearish flag. If I'm looking at something relative to trend, see what the trend is, right? Trend, negative, momentum, negative, things are fading. Remember, this is priced in dollars. If we go over here and we look at the dollar, you see, dollar's moving up. When the dollar moves up, you're going to see gold move down. And in general, this is what we are seeing, right? We're seeing the gold move down as the dollar moves up. But right now, they're both presenting flag patterns. And that flag pattern, see, this flag pattern is suggesting potentially a fade into the 104 area, or it would not be good. The dollar needs to stay compressed absolutely, or the Fed is going to be between a rock and a hard place. So I don't know how that one's going to get negotiated, but it'll get negotiated for sure, or something's going to break. What are we seeing in gold? 2,300, good buy zone. 2,350, pretty good sell zone. If it breaks above 2335 today, it should head to 2350. And if it holds 2350, it's got 2382 at that last anchored VWAP. I think they're going through this wall of worry. Let me delete, I know I'm taking a long time with this. Let's remove all the horizontal lines, and then let's draw a Fibonacci, right? 50% range on the Fibonacci is right here. Let's see. And let's make this a 0.5. And then make this a 0.75. All right, we are going to see this price action probably hold in this region, right? Anywhere between 2,300 and 2,360. Otherwise, 2,385 is next. All right, everybody, let's stay frosty. And thank goodness we'll be doing Zoom midday today. Stay alert.